are prepared to break the silence. I'll be out in the sunshine, running beside the lions. I've been feeling down, but I've been looking.
Hello, welcome back to WinFS Trading YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. I don't used to upload video anymore, but I look at the problems and the causes of losses in the trading community, and I create content to solve those problems. And the only solution to losses that traders faces in the Forex synthetic market is discussing solutions to those problems from the experience point of view. You have to discuss those problems from the experience point of view, and such solution is the highest, is the best, is the most accurate solution to all these trading losses and problems. Okay, so the topic is unlocking valid direction and entry in Forex synthetic market. Unlocking valid directions. Okay, so it should be direction, not directions, because we need focus in this market. Okay, direction and entries. Okay, entries may vary but in the same direction. Okay, so the topic is unlocking valid direction and entries in Forex synthetic market. So before I go to practical aspect of this content, I need to read out the descriptions. I need to read out these explanations, and we'll go to practical on both the Forex and the synthetic chart. Okay, direction studies in trading is very trickish and hard. This is because every direction is affected by all time frames. Directions are also affected by turning points at higher time frame. Okay, moving average also signal continuity and the reversibility of directions. Direction studies is more of mathematical. Okay, once one knows direction, I mean main trend or impulse direction. Okay, there are two types of direction. We have major directions and minor directions. So I'm talking about the major direction here, talking about the major direction, okay, or the impulse direction or the trend direction, okay, of the market. So the next thing, once one knows the direction, main, major, trend, impulse of the market, the next thing is entry. Your entry is the next thing. Okay, entry location determines the magnitude of RR and profitability of running trades. You see that when you are now considering the entry, it will help you to optimize your risk management. Okay, your risk reward, which is RR, will be optimized, and the profitability of your trade will be normal, will be close to 100%. Okay, you need an entry that have at least 95% win rate. Okay, every entry you make in the market, every position you open should be in such a way that you have 95% win rate and infinity risk reward. So we are not placing a trade to get 1:1 or 1:2 or just 1:3, but you're actually looking for entry that will give you higher than this, at least 1:3 plus 1:4, 1:5. Why you still make sure that you are not losing, like you are not having a poor win rate. Okay, the win rate below 70% is very bad. You are going to end up blowing your account. Okay, so if your entry leads to SL triggering, okay, if your entry leads to SL triggering more than it leads to TP triggering, if your entry leads to SL triggering more than it leads to TP triggering, then your entry or direction or both are wrong. Okay, given that direction is known in multi-time frame, because we are actually looking at smart money direction, you are looking at big banks direction, you are actually trading with banks, you are trading with the main direction, you are trading in the direction of high liquidity. You are trading where the banks are pushing the market, okay? And so given that you know this direction in multi-time frame, because for you to know where banks are trading, the direction the banks or big boys in the market, big investors, hedge fund managers, if you want to know the direction they are following, then you must do the multi-time frame analysis. Okay, so if you know this direction, the entry can be optimized by doing the following. 1. Monitor the chart in 30 minutes time frame or 15 minutes time frame for possible reaction to valid turning point, okay? And possible change of trend in 5 minutes or 15 minutes time frame. So you are looking at two things. Number one is you are looking on the chart to see reaction to a valid turning point. A valid turning point is very important to understand what it is. Valid there means that price cannot break or go against that turning point. That is the last turning point before the market will change direction. Okay, so it should be valid. Okay, so valid turning point and possible change of trend in MO5 or M50. So you'll now be looking for change of trend in MO5 or M15, and all these things I'm going to explain on the chart. This is just the theory part of it. Moving average should support your direction. So when you are running analysis, not only that you run price action analysis, you also need to run indicator analysis, and here we talk about the moving average analysis. Very important. The indicator that is most crucial and that affects signals that can make you grow profit or lose more money is moving average. Okay, so you need to actually study the moving average. Okay, moving average should support your direction and entry in at least 5 minutes to 4 hour time frame. In at least 5 minutes to 4 hour time frame. Okay, so that you will not place a trade and say, but the technical analysis shows that he's going to go in this direction, now he's losing. It's because you didn't actually modulate that technical analysis with indicator analysis. Okay, but in the actual sense, the indicator analysis should not come first. If indicator analysis comes first, you lose more money. The price action should come first. Then when indicator tells you the same thing with price action, it actually improves the accuracy of the price action, and it makes you to have more confidence, and it increases your profitability and win rate. Okay, timing, smartness, monitoring, and obedience. TSMO. Timing, smartness, monitoring, and obedience. So if we put I here, since we talk about timing, this we abbreviate to TSMO. Okay, so you need TSMO in order to make good advantage of this topic, because the major variable, let me call it the major variables in trading that keep people losing, that make you be among the 90% loser, is direction and entry problems. Apart from risk management, which is also a bigger issue, direction and entry is one of the most and further bigger issues that you need to actually tackle for you to succeed in trading. And right now I'm going to the chart for you to continue. Okay, this is volatility 75-1S. It's one of the biggest problem people have, is that they can't control their mind. Before you start making trading plan, before you start producing signal, before you want to go to the chart, before you open your trading app, MT5, trading view, whatever, okay, even before you want to check for news, the first thing you need to do is to meditate. Go to a silent place, meditate for 20 to 30 minutes. Even if you are going to miss that trade, any trade you want to produce in rush is going to lose. From experience, is going to lose. You have to meditate 20 to 30 minutes. And what are you meditating? You are meditating what has been making you to lose for the past period of time and what has been making you to profit. As you are meditating, you are filtering out all those bad habits that makes you to lose, and you are trying to improve on those good habits or those profitable habits that makes you to make more profit. Okay, then after this meditation period, you now open your chart. Make sure you bring your pen and start writing out what you are seeing in the market. You don't just select asset and start analyzing. Only look for assets that have potential. You can scan through assets and find the one that have potential by just scanning them, by opening them at the monthly time frame or the weekly time frame. You can scan through and know where the market is heading. And for you to understand time frame studies or time frame analysis, that is top-down analysis and multi-time frame analysis. Top-down analysis, which is also multi-time frame analysis, but it should be top-down. For you to understand it, you have to actually go to market structure, which are included in my Forex trading course. Okay, so if you enroll for my Forex trading course, you will learn that I have the Forex trading course and synthetic trading course. Let me show you some of these courses. You see, all these courses are based on faculties like your ability to focus on one thing. So we have up to 11 courses here. So we have Forex course, we have synthetic course. So somebody will say, why not combine Forex and synthetic? They're not the same thing. They have different approach. Okay, then we have this number 3, synthetic day trader rollover program, binary option, rise and fall course, and the rest, boom and crashing. This is millionaire course, volatility 75 indices, millionaire course. You see, each of these courses came with different ideas, and you have to approach them depending on your need. Okay, so let's continue now. I'll go to make sure that you are doing the right thing. Don't just look on the chart and say the market is going up or down. No, don't just look on the chart on the lower time frame. Even 1 hour time frame is not good. Even 4 hour time frame is not okay to see what is happening in the market. So you need to do top-down analysis. Don't just look at some lower time frame and conclude where the market is going. Look at this trap here. You see that this asset break this level, and this is a sign that it's going to continue going down. Now this error came when you cannot do top-down analysis. That's where you see this error. But if you do top-down analysis, you see, most traders don't have time to do top-down analysis because of, in their mind, they forget, because he didn't do meditation. You need to be, you need to meditate on this thing. Whatever you can do to make sure your mind is okay before you start doing trading analysis, you have to. Okay, if you check in the monthly time frame, you see that this market have potential. That actually this movement here is what? A retracement. This is a retracement because this market is moving to a high level and then retrace. The low that produce that high, which is this high, and just this market structures indirectly in this course, but you need it. That's why I'm teaching it. So by right, I'm not supposed to teach it. So it leave this low and come to this high and then retrace. This is the idea. It retrace, meaning that this is a new impulse, meaning that this market we reach to this high. No matter how it is retracing in lower time frames, it must reach here. Okay, no matter how it is retracing in lower time frame. So let's go to the weekly time frame. Then in weekly time frame, since the month have already told us that it's going up, right? So this is the area of strong resistance. Price cannot break this, strong support. Price cannot break this support. Okay, price cannot be able to break it. And so the weekly is telling us that this market can retrace to this level, but it can never break it. Then it will shoot up, right? Then we have to go to the daily time frame. In the daily time frame, we see a very strong trend line. That is what we call top-down analysis and structural analysis. Structural analysis is the ability of you to know key levels where price can never violate, where price will respect, where price will flow, like we originate and destinate to. It will originate from them and destinate to them. You see that in the daily time frame, we have these two trend line. The lower one is a support trend line. Okay, so structurally price can break it, but the upper one is a resistance trend line. Structurally price can break it because this market have to make a higher high. The weekly high have to be broken, or at least equal weekly high will be formed. Okay, so when you go to H4, you will never be distracted by some of the things that is happening here. You see that this market structurally it move, create a high, retrace, it couldn't take out the low. See, the issue of turning point orientation and reactions matters. The price cannot take out this low. It cannot react in the territory of this low. It cannot take out this low. It cannot come to the territory of this low. And then it will only reach here and create a higher low and do what? These are the things. Even when you are doing analysis, after you do analysis, just be looking on that chart and meditate. Know what you are doing wrong and what you are doing right. Okay, and delete those wrongs and become clean enough to do the right thing. Okay, so here you see this market, it break this high. Okay, it break that high and break it, and then it give us a little retest. I create a new high, created a new high here, and then you see that market respect turning point. If you extend all these turning point, you see that each time price came, they respect them. Okay, so it get this low, higher low, and get this higher high and break it. Now look at the issue. The market started retracing. It started retracing, and reaches here. Okay. Now, in the H4 time frame, you know that this low has been taken out. This high has been broken. Price break this high and then retest to it. Price break this high, and then this is a retest to this high. Okay, so that here it will continue to go up. Why it will continue to go up is because this has been broken. This has been broken. Okay, and you see a big gap. So this price coming to this high, you know, and look at this. If the daily time frame, when you are analyzing market at any time frame and you become confused, go to the upper more higher time frame. If you go to daily time frame, you will see that we did the right thing. So this is the turning point here. You can see how market changes and make it a turning point. So we have a bearish candle and bullish candle, and then a breakout, so it become a turning point. Now price breaking, so if it drop and tap here, it is hard to believe, but any day it managed to reach here, you see it will continue going up, because this is the theory, the law of break and retest. When market break key level, they come back and continue going in the direction of breakout. You see, somebody will ask, what of in that H4 there are other levels that were broken and price came to them? Why not trade them? These ones, why not trade this one? Like, why not buy here why not also buy here? Why is it here? It's because the best trades that win, the trade that actually win, are the trades that have meaning in the higher time frame. You see, the daily have shown us the truth. Other time frame is lying. Anything that is telling you to buy here is a lie. Even though when you buy you make some profit, but that's not the type of buy you want. You want a market to complete its motion and create a new direction, because this is a retracement. You don't want to trade in the middle of the retracement. Why should you be buying a selling retracement when that selling retracement hasn't ended? You need to wait for this selling retracement to end so that you are going to buy the impulse. You see, that's what's happened. Okay, so monitoring, as I said in this video, we talk about monitoring, we talk about smartness. That is TISMO: timing, smartness, monitoring, and obedience. Okay, yes, you know that in the daily time frame, price have to come to this level before it will buy, right? So as a trader, you need to be monitoring. Even when it seems that it is not even coming to that level, you must believe. Belief is another thing. Confidence and belief. You have to believe. I didn't put it in the document, but belief is among it. So you have to believe. You have to believe that this is gonna work. You have to believe strongly. If you want to know what I'm saying, go and watch the word motivation in the playlist. Then you will learn certain things. You should know, as a trader, you should be strong. You should be ready, to make this money. And then you should believe that it's gonna happen. Okay, just be happy that this is a key level that you notice. All you need is patience for price to come there. Okay, so when price come here, you are timing. As price come here, I'm going to change the color of this to brown. Now we are going to go to, as price is touching here, you see we have a kind of hammer, a rejection. This is a hammer, and then we have a delay in price move, like selling. The sellers, we have delay in selling pressure. The selling candles are now getting smaller and tinier, and then we have a big buying candle. This is a sign that this market is about to push. But when you go to because I say you should go to lower time frame to get an entry, right? When you go to something like 30 minutes time frame, and then you monitor what is happening here. Okay, you monitor what is happening here. You notice that when price tap into this level or zone, it starts making higher high, higher high, higher high. A price that will go up have to make higher high, higher high, higher high, and higher lows. Okay, so you just look for cheapest price to enter this market. Okay, you just draw the trend line before you enter a market that should be structures, and one of it is trend line. So this is the trend line it is maintaining. So you can enter this market at this low and put your stop loss at previous low, like here, or where the swing starts. You can put it about that swing, like somewhere here, and you are going to ride this market toward the monthly is telling you, or the weekly is telling you, or the daily is telling you. It's telling us that this market is going to take out the previous weekly high, which is at this level. Your price is going to take this level, okay, around the 9,859, okay, 9,850 is almost heading, okay, it's almost heading to that. Okay, you can see it's almost heading to that. It's almost breaking it, so it's going to make a new high. Okay, so I'm going to go to Forex market and talk about this issue. I'm going to go to Forex market and review it. At least we're pushing. Okay, I'm going to work on gold and the US oil, and then I think this video is not going to take more than 35 minutes because it's a very great topic that people need to know. Okay, so I will open gold and we will start. Okay, now we're on gold. Okay, so remember the topic, knowing the value direction and entry. Okay, so right now I'll go to monthly time frame. Okay, when I go to monthly time frame, what are you seeing here? What I see is that gold break this level. Gold break this level. Okay, and currently is rejecting from this level. Okay, is rejecting from this level. Gold break this level means that gold is buying. The structure is higher highs and higher lows, like the structure is uptrend. So I'll go to the weekly time frame. When I go to the weekly time frame, I discover that this level, gold cannot be able to break this level. So this level become a nearest support. Okay, gold couldn't break that level in the weekly time frame. So I go to daily time frame, and you see clearly that this market is actually ranging. Okay, it's ranging between this lower support and this higher resistance, the upper resistance, and the middle support. We have a middle support here, so it's ranging. It's actually ranging between this upper resistance and the middle support. It's actually ranging. And so as a trader, what you need to do is to wait for gold to drop to this lower support. Simple. You wait for gold to drop to this lower support. Why? That is the valid entry. We are talking about valid entry, valid direction. Valid entry, and then the valid direction will be up. Somebody will say, why not consider this level as when price drop, it start going up like this and drop again, go up. Why not consider this level? As you're considering this level, we are very, very, like, we are making the highest financial mistake. Why? From this upper resistance, from this resistance, price have to drop and come to support. But you want to buy in the middle. The day they will drop the price, you won't know, and you're going to lose as much as you can. Okay, depending on your risk management. So one thing is, if you lose money in trading, it will trigger further losses. So don't ever dream to lose money. But when you lose, try to maintain your psychology, so that, because you will definitely lose money, but your psychology to keep going, to keep believing that you're gonna grow, you're gonna have a positive profit results graph is what you need. Okay, but don't lose carelessly. But if you lose when you have tried everything and you still lose, then make sure the next trade become a war. Fight the next trade to win. If you lose the second trade, fight the third one to win. Have a good risk reward, so that when you win big, and when you lose small. Don't lose big and win small. If you lose big and win small, you are wasting your time as a trader, because you will give up and you will go poor and broke. Okay, you see, so this is what we are seeing. Let's change the color of this to black. Change the color to black. So we still have some time to go. So this is also a trend line. You know that this is a trend line. It's a trend line. So gold break in the daily time frame. Gold break above this trend line. How do I know? This candle close. It close above this trend line. So the next entry we are looking at is here. We want gold to come and test, to tap from a week, from a rejection, to tap into this trend line. Okay, we want gold to come and tap into this trend line. So if we go to H4 time frame, we can see clearly that we need gold to come and tap here, and then we buy gold, we buy more, and then we take it to the upper resistance. The upper resistance is around price of 2,430 to 2,450. Okay, so we are praying. You should be praying you should be praying for this thing to happen, for price to retest to the trend line. And basically, the current plan the market is following should be this plan. It's following this plan. So if it is retracing, when you are planning your risk, where your stop loss should be, and all of that, that's why you should enroll for my courses, whether synthetic or forex, depending on what you trade. There are many courses so that you learn how to plan your trade and how to get entries, how to plan your risk management, your entry and exit. Okay, you see that we expect gold to actually fall. Now, you see, as a trader, don't trade every direction. You have to be focused. You have to be valid. And how can you be valid? You have to be a valid trader. How can you be a valid trader? You become a valid trader when you have focus, when you believe in few things that works and forget the rest. Okay? You have to have focus, which means you have to believe in few things that work. If you go to the document, I made mention of something which I'm going to review. Okay, you notice that I say that there's something very important here. Once one knows the direction, so the direction we are talking about is the measure, the trend, the impulse of the market. So the direction you need is the direction that is the measure or the that is, that is following the bigger direction, that is following the banks and the big investor. You see, when you come back here, you'll be tempted to sell gold. You might make profit selling gold, but it doesn't make sense. You'll be tempted to sell gold somewhere at these zones, but it doesn't make sense. You'll be tempted to sell gold, but it doesn't make sense. If you sell gold, you are practicing a bad trading habit, because you are trading against the bank's trend, the bank's direction. What bank will do is that they will create just one candle, one H4 candle, which will break out, to hit your stop loss, and you lose more money. But bank can decide to start to take profit. What I mean, like to hit stop losses of late buyers. So bank can start retracing this market so that it will hit stop losses of late buyers. Then wise trader, who are valid trader, who actually follow one direction, and which is the main direction, they will buy as market, when market retraces, when the retracement has complete. Okay, they'll buy at this level here. Okay, they'll buy. Okay, you see, they'll buy at these prices. So when you apply the TISMO, which is the timing, smartness, monitoring, and obedience, you discover that you have to come to lower time frame and get the right entry. Okay, you need to come to lower time frame. And get the right entry. Okay, so when you come to 30 minutes or 15 minutes, once price is reaching this level, what you need to do is to see when it is making higher high, when it is about making higher high. You are not going to put your stop loss where it will be triggered. You must put your stop loss. The best stop loss is the last swing. You can put it on the last swing or any other differential swing. Since we are looking for buy, we'll look at a higher low to put our stop loss, and then we'll buy towards the nearest low. Okay, example is the buy that happened here. Since the retracement actually died off here, it reaches here and stop, right? So when you see that this market it creates this higher low here, this is a higher low, and push. What you need to do, you can just buy here and put your stop loss somewhere here, or put your stop loss somewhere here, and then you should have made all the profit all the way to here. That is understanding of the market. This is 380 pips, okay, generated. Why you risk around, if you put it here, you risk around 230 pips. It's very big, but you are making it. Or if you place it here, you risk around 100 pips. It's very big, but you are making it. Okay. One thing is better, you have $1,000 account and you risk $100 and you get back the $100. Like, you make a profit of 100%, 1:1. But that trade is sure. So you have a $10,000 account and you risk 10% of it, which is you risk 1% of it or 2% of it, which is $200, and you get back $200. That is nice. That's because you know the direction and you know your entry is valid and you know where you can put your stop loss and it will not be triggered, which is either the last swing like this or any other swing closer to your entry. Yeah, any other swing closer to your entry. You are entering somewhere here, then your SL should be around this swing, not on that swing, but somewhere closer to it, but in a way that price will not come and form an equal potential. So that's why you can put it exactly at this end here, the end of this week. You put it somewhere below. Since you are buying, if you are selling, it should be somewhere above. Okay. I will end this video. Thank you for watching. Keep coming to WinFS Trading and try to enroll for my courses. I will show you the courses again. Why I make these courses so different is there is no problem combining forex and synthetic course, but each have different mind and psychology pursuing them. That's why I teach it separate. But if you come on a demand that okay, you want to learn the two on a single course, you want to learn forex and want to learn synthetic on a single course, then it will be an arrangement, it will be a negotiation, and I will tell you the price. But if you are not greedy, you want to learn separate, the prices are here. There are different courses. Even volatility 75 indices millionaire course, there are special things I teach there that can make you a millionaire. Even boom and crash indices millionaire course, there are special things I teach there that can make you a millionaire trading boom and crash market. Okay. So you can see even Binance crypto trading, you can see all these things. Thank you and keep coming. Bye for now.
You've got, if you're prepared to break the silence.